Welcome to the October 16th, 2020 video version of the Wagner Daily. My name is Rick Petticelli, and once a week this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. As far as the indicators on our chart, just quickly, we have a 5, a 9, a 20 EMA, 50 MA, 200 MA, and then a relative strength line. That relative strength line is versus the S&P 500. And on the weekly, we have the 10 and 40 week MAs and a 200 week MA and an RS line as well. So first up, we're going to go through a few broad market averages. IWP is the mid-cap growth, and that's broken out to new highs already, and that's showing a ton of relative strength. So is FFTY, which tried to break out to new highs but failed. So IWP and FFTY are both growth, and they're outperforming, which is a great sign for our style of trading. As you can see, the S&P is stalled well below the prior swing high, but it has a nice cup with handle pattern forming here. So as long as the price stays above the 20-day EMA, this should be in pretty good shape. The same goes for the NASDAQ composite, the NASDAQ 100. And the Dow. And here's the NASDAQ composite. Just really nice handle-like action, and the handle's drifted lower. So there's a nice shakeout within the handle. So during the next few days, we want to see if the price can get back above this 5-day MA and back above the low of 1012 and hold. If not, then maybe you might need to pull back and test this 9-day EMA again and the low of 1015. So overall, we like what we're seeing in the broad market averages, and aside from FSLY and maybe a few others that have sold off, like DKNG was a disappointing sell-off, most of the positions in our newsletter are doing fairly well. Most stocks on our watch list are in pretty good shape. And we'll continue to monitor these charts for constructive price action. What I'm looking for will be stocks that are breaking out on heavy volume, stocks that are pulling back in on lighter volume, stocks that hold up at obvious areas of support, stocks that close off the lows of the day, stocks that close off the lows of the week. So I'm thinking of all these things as I'm running through a watch list to get an idea of how the market's acting under the hood. As for open positions in the model portfolio, we sold FSLY today, and we were long from 93.70, and we're up a solid plus 40%. Once we're up 20 to 40% in 2 to 3 weeks, we really want to hold on to the stock as long as we can, and as those type of moves generally lead to bigger moves. However, on occasion, they can fail as well. And unfortunately for us in FSLY, there was news after the close on 10/14 that caused the price action to tank about 25% in 10 minutes in after hours trading. So we didn't have a chance to protect ourselves, as the 10/14 close was still above the 5-day EMA, and I try not to do anything with stocks when they're so strong and holding above the 5-day EMA. So it was a brutal sell-off in after-hours trading, and then during the pre-market session, the stock really failed to bounce and opened around 86 and then clipped our stop, which was just a little bit lower, as we put our stop beneath the low of the pre-market trading session, which was just about the only thing we could do. However, that's the official stop and the one we'll go with in the newsletter. But for those who are active traders and can be in front of the monitor when the market opens, there is another option. I just don't use this option officially in the newsletter because I can't expect subscribers to monitor the first 5 minutes of trading on the open and adjust stops accordingly, especially if they're at work or nowhere near a computer and can't follow the price action. But for those who are already in front of the screen monitoring the price action, one can use the 5-minute rule, which is simply whenever a stock gaps down below a stop within the first 5 minutes of trading, you wait for the first 5 minutes of trading to close and then set a stop beneath that 5-minute low, maybe 10 to 15 cents as the new stop. So for example, in FSLY, here's the first 5 minutes of trading. And it's not easy to do sometimes if you're already down quite a bit. It's going to be tough to sit through the unknown of the first 5 minutes of trading. But you could always sell a third of the position on the open, or even a half if you're really down significantly. But at least hold on to half of the position using the 5-minute rule. After 5 minutes have passed, you see FSLY has a low of 85.10. You put a stop beneath that low. And then you just hold on. And if it triggers, it triggers. If not, you look to exit on a bounce. And notice I say exit on a bounce because we have to be realistic about what's happened. Just because we survived the open doesn't mean that the stock is headed back up to 105 or 120 over the next 2 to 3 days. And FSLY could end up bouncing over the next 2 to 3 days. But when a stock does something so unexpected, I just feel it's best to exit while you can, take the loss and move on, rather than having this stock on your books and then messing with your head for 2 to 3 days in a row. And who knows, maybe it goes higher for 2 more days in a row, then hits the 20 EMA and comes right back down again. And maybe you forget to sell and you're stuck with FSLY again at 85. And which is why I mentioned in the classroom today that for those who are still long using the 5-minute low, you can exit around the 93 to 95 area, which should put you close enough to the original entry in the newsletter so that you can maybe reduce your loss to 1, 2, or 3% rather than the 8% loss we had. We're out of FSLY. However, we still have several other positions that are looking pretty good. ZM broke out on a nice pickup in volume with a solid 5% close. SC defended the breakout pivot and reversed higher, closing back above the 10 and the 5 and 10 day MAs. Also bounced off the 20. Twillo bounced off the 10 day MA, closed back above the 5. SQ positive reversal action back above the 5. SC bounced off the 10 and closed back above the 5. DDOG also recovered, closed back above the 5 and 10 day MAs. PIN was a bit weaker, but it was definitely a nice reversal candle. We'd add to the position, but earnings are next week, so we're not going to make it official. But if the price can get back above this 44 area, might be worth for a swing heading into earnings. CRWD wasn't able to get back above the prior day's low, but did reverse off the 20-day EMA. TDOC was a bit disappointing, but I believe as long as it holds above the 20-day EMA and this 217 area, it still has a shot of working out. Tesla pulled back on lighter volume, gave back the entire advance from 1014, but is still above the 5-day EMA and the 10-day EMA. And we have NET, which recovered nicely from a 10% down from a nasty gap down on the open and is back above the 5-day EMA. Just explosive price action here over the past 4 to 5 sessions. So for it to chop around here in this 54 to 62 area wouldn't be unusual. As for stocks that are potentially in play, SHOP, here's the cup, and then we have a potential handle forming. I think a break of this downtrend line here, or just a few more days sideways and then a move through this 1083 area could serve as an early entry point, then look for, and then a break of the handle high. AMD, also a cup and handle forming here. The first entry could be over this downtrend line of the handle, and then second entry could be over 86, and third over 88, 90, or let's just call it over 89. Or some of you can just wait for 86 to get taken out and then add at 89. That works as well. MRVL is a pullback entry. We have a breakout. We have a pullback. A nice dry up in volume here. Price needs to break this downtrend line to get going. FROG, which is an IPO that has a pullback here. So the pullback broke, there was a downtrend line break, which stalled. And then we have another bullish reversal candle on Thursday. So if the price can get above Thursday's high, could be a sneaky entry into a stock that might be able to run, I'd say, about 15 to 20% higher. Another IPO is Snow, which had a bullish reversal candle. Look for the price to get above 242 and hold. That's the high of the reversal candle, and hold here. If so, then it might be able to clear this 254 area. And the last setup of the night is SE, which bounced off the 20-day EMA with the bullish reversal candle. So look for the price action to either hold above. If the price gaps a little bit higher, then I'd wait for a pullback that holds at the high of 1015. If the price opens a bit lower and pulls back in, there might be a chance to buy on weakness around the 166 area for partial size, and then look to add over the high of 1015. All right, that's a wrap for tonight. Thank you for joining me. We'll see you next week.